Ladies and gentlemen, AMC stock is pushing it to the wire right now. We are right on our 50-day moving average. If you zoom this in, you can just look at that. Look at that. You are right on the 50-day moving average, struggling around this area, going up, going down, but overall it looks like you're finding a lot of support at that 50-day moving average. And if you have not seen my last video about how I think a bounce is coming, you definitely want to watch that one as well after you're done with this one. But nonetheless, we have a big catalyst coming next week on Tuesday. You have CPI data that does come out, so you only have one more day of trading until that CPI data does come out. So it's very important that we talk about that here in this video, as well as how the markets are likely to take that and go over exactly why I do think AMC will bounce because of these catalysts that are going on. And we do need to talk about the Ortex data and a bunch of other things. So let's get into it. Hit the like button and subscribe to the channel if you guys find value out of this video. As well as that, make sure to source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with us live in real time, link down below in the pinned comment to do so for that one. So like I said, AMC stock right now, it looks like it's going to hold the 50-day moving average. Only a couple minutes here left of trading, but that's why I call this out, and that's why it is so important. Now, coming on Monday, if we do have a green day, that's going to be your confirmation of this reversal, of this bearish trend ending. Because typically, when you break to a moving average, like this 50-day moving average like we've come down to this, and then you stay above that for 1, maybe 2 days, that's pretty much confirmation that you're going to see a reversal. At least that's usually how it does play out. So that's why it's very important that I am watching that key price. But we are down about 7.5%. So not a good day overall for AMC. Not really a good day overall for the markets. You guys can see we are heading down into the last couple of minutes of trading today. And there was some news that did come out. Really it says, as inflation bites and America's mood darkens, higher income consumers are cutting back too. And basically they're cutting back on dining out, travel, vacations, and cars. So that's things that you don't really need, right? You don't need to go on a vacation. You don't need to go out. You don't need to go eat at a restaurant. AMC falls in that category of you don't necessarily need to go to a movie theater. So there's a decent reason the markets are shorting AMC into the ground today. AMC is not alone. Dave & Buster's, other stocks that I have trades on are down and going down quite substantially today. So it's not only AMC, which that's what you want to watch out for if, say, there was a risk on day today and people were just buying everything that was risky, and you've seen AMC stock down. Well, a lot of other retail stocks were up. That's where you kind of got to take a step back and say, hey, what is going on here? Did things change? That's not the case. The whole risk on sector, the whole retail stock sector is down quite substantially today. A couple runners here and there, but by and large, down quite substantially today. With the NASDAQ even down 1.36%, Russell 2000 down 0.35%, and the Dow Jones up about 0.5%. That's kind of that rush to safety that we are seeing. But we do have that major data point and catalyst that does come out on Tuesday at 8:30 in the morning, and that's core CPI month over month. That is estimated to come in at about 0.5%. So that would be about 6% inflation throughout this year if you 0.5 times 12, 6% inflation. Now, if it comes in higher than that, the markets are going to freak out. If it comes in on expectations like it usually does, the markets might be pretty chill about it. Now, you have over the weekend to really come to your own conclusions on this and figure out how you want to trade this, because Monday we don't really have anything too crazy that does happen. You do have a couple Fed speakers, but besides that, not too much data that actually does come out. You have Fed Bostic right there, and I believe you have one more at a different event. So yeah, Fed Evans right there as well. So you guys do have some time to come to your own conclusions, what you think is going to happen, and trade that if you guys want to, but it's going to be a very big deal. But at this point, it looks like the markets have kind of realized that the Fed is not our friend. They're not going to help out the markets. They want the stock market to go down, and at the same time, the market is really holding up very, very well. Besides certain stocks, like AMC. Now that's where we get into this bounce scenario. If you do see the markets coming down in a substantial way next week, you're likely to see these risk on stocks actually start to make moves to the upside. Well, why is that? Because that could be seen as almost in a weird way a safety trade, because hey, when the markets are going down and these other stocks are going up, investors tend to flock to the stocks that are actually going up, right? It makes a lot of sense. And that's usually why you can see on some of those days, AMC stock can be up dramatically and the markets are down, right? That's why that is, because why, you know, what else are you going to do? AMC's ripping, or the retail stocks are ripping, and the markets are down. What do? You buy those stocks. So that's kind of what we could set up for. You know, AMC has shown they do have pricing power. They have been raising ticket prices, things like that, and it hasn't slowed anything down. So it'll be very interesting to see how the markets do take that. And really, you want to see what happens on Monday. If we're substantially red on Monday, then you're likely to have a green day on CPI. Vice versa. If you're very green on Monday, you'll likely have a decent sized red day on Tuesday. That's really how the markets are. They're so back and forth, it's ridiculous. So nonetheless, that's the data point. That's really what you guys need to know, the context behind it. I think a simple fact is AMC stock has already fallen a lot, and there's a business behind AMC. It's not some penny stock that's a pump and dump scheme. You've fallen a lot. So even if the markets want to finally take a leg down, it probably would be in the broad markets, not really in AMC at this point, right? Stocks only go down so long and so hard, and AMC surely fits that category, going from 34 all the way down to 18 in a very, very short amount of time. But markets are definitely taking another move to the downside here to close out the trading day. So let's get into some of the data that you guys need to know around AMC stock. Let's go ahead and pull up good old Amy. Oh, two M's. Don't need that. So we pull up AMC. 20.59% short interest of free float. Current shares that are sold short, 106.11 million. Cost of borrow max of 2.73%. The utilization of 100%, and the days to cover at 2.41. So this data is not really moving around all too much. It isn't being reported to us that the short interest is actually going up for the day, when in all reality, that's exactly what is happening. They're taking this advantage to short the stock into the ground. But on another positive note, we are seeing 22 orders totaling $12.37 million, positive order value of 53%. So that's very important to point out. We're still having a positive order flow for the day, which is pretty damn big. And I think it's only a matter of time before we get the next buyout catalyst from AMC stock. We know they're looking at 5 businesses to potentially buy, worth all the way up to $500 million. So we know there's catalyst coming. It's only a matter of time. And, you know, do what you guys got to do for your own situation. But I personally like the prospect of buying calls at this current moment, as well as just averaging down. And think about it like this. If you could go back to when AMC was trading at $12, $13, $15 per share down here, people were freaking out. Wouldn't you have just bought as many shares as possible? Because then we ran to 30, 35, right? You would have took that opportunity to average down if you could go back in time, buy some calls, do that type of stuff. So, that's kind of how I look at it, is I would have done that, so there's no reason why I wouldn't do that this time around. AMC will have another rally. It will go back to all-time highs. It's only a matter of time, though. Now, that's basically it. As far as the max pain, you're looking at $21 per share by next week. That data point, that's going to be the most important thing that people actually do pay attention to, because if inflation is high, stocks are up, that's a pretty good sign to the Fed that, hey, you can go as aggressive as you want to get inflation under control. So pretty interesting, but the federal funds rate is actually going down a little bit today. It's projected. The probability went from about 80.5% earlier today for a 50 basis point rate hike. Now it's at 78.3% probability for a 50 basis point rate hike, and that's probably because this consumer spending data that did come out, but that is not going to way too heavy on the Fed. They are still going to do what they got to do, and the markets are still firmly pricing in the next 1, 2, 3, 4, 5, 6 Fed meetings at a half point rate hike a piece. You're talking about, you know, 3% interest rates by the end of the year. Add on 0.25% where we are at right now. So the markets are really pricing in about 3.25% interest rates by the end of this year. And, you know, the markets, I don't know if they're fully expecting that. A lot of people are bullish. They're trying to fight the trend here, but there can be these big bear market rallies like we have seen. This is what you'd categorize as a bear market rally, and you guys know what happens when the markets do fall into the floor and liquidity is restricted. That's when you start to get short squeezes on monstrous proportions. Now, let's talk about a little bit more about the technical outlook for AMC. So we are holding a lot of strength at the 50-day moving average. It looks like we're going to close above the 50-day moving average. We only have about 2 minutes left in trading today, so that's looking like a positive thing right there. We did not retrace too much to the upside today. It's been a pretty bearish overall sentiment for the day. For next week, if we can really bounce back up and retest the $21 mark, that's going to be a huge sign. The further away we get from the 50-day moving average, the better the situation is going to look. If for whatever reason Russia nukes Ukraine or something crazy happens over the weekend and we do happen to head down, you're probably going to head back down to about that $15 level. Now, that is possible, but stocks that go up, come down, they tend to have some bounces if there's a business behind them like AMC does have. If we do break out and it's a really strong week next week, $25 is going to be that next key level. And as far as the MACD, that is bearish. The gap is widening quite dramatically. The RSI 44.34, so that's, you know, on the oversold side of things. And the volume for the day is sitting at about 41.7 million shares. So not the best report to bring to you guys, but we are holding up this key level, and that should definitely be a positive thing nonetheless. And we're actually up in after hours a little bit, popping a little bit in after hours. So we'll see exactly how that does go. Oh, look at the SPY. Look at those candles at the end of the day, baby. Let's go. That's definitely a positive sign heading into the weekend. But we'll see exactly how that does, you know, pan out. I don't want to get too far ahead of myself. We do have CPI data that does come out. If that is better than expected, like I said, markets are going to rally off of that. If it's worse than expected, we just got closer to the MOAS. So that's going to be all for this video. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. But most importantly, you guys enjoy your weekend. We got a lot to talk about, you know, over this weekend about trading AMC, like why you shouldn't, in my opinion, buy puts in AMC, regardless of if it helps or hurts the movement. It's just a bad fundamental trading strategy, and it's really been bothering me because I know a lot of people probably have been doing that, and you're probably going to get smoked on those options. You might actually be up a little bit right now, but you'll probably get smoked on those options. So there's a lot we need to talk about, guys. A lot to unpack. Stay tuned to the channel for all of that action. Like I said, hit the like button, subscribe to the channel, do what you guys got to do. If you guys want to come trade with us live in real time, link down below in the pinned comment to do so for that one. Thank you for watching, and I will see you in the next one.